Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 26th of December 2025. The first chart is the US Dollar Index Futures, as usual. You can see the market moved lower this week, but it's reluctantly moving lower at this point in time. It's trying to hold on to the lows of this bar here. It's not showing any freedom of movement towards the downside. This is the lower level you would expect price to come to after it broke down below this level. But at this point in time, the market's showing a reluctance to do so. And we'll just see how that goes. It's certainly weaker than stronger at the moment. There's no doubt about that, with the market moving lower in a rough channel like this. But it's not moving easily lower. It's drifting lower at best on reduced volumes. This week's volume was affected by the holiday period, so we can hold that with a grain of salt at the moment and just see how things play out over this little period. But you can see the market has broken down below the lows of this bar where the market was moving sideways. It's not moving with any freedom of movement towards the downside at the moment. It's drifting lower reluctantly at this point in time. This is the E-mini S&P 500 index futures, and they moved higher this week, albeit with a reduced spread. The market moved higher in response to this buying support which emerged last week, which is exactly what you would expect it to do. It would either test for supply or push higher in response, and it did push higher, and it established a new closing high up here. The spread was narrow. It was reduced trading this week, so that offers some explanation for that. But it certainly wasn't accelerating higher with any vigour. It was really just floating higher on a lack of selling pressure, which is probably what you're going to expect at this time of year when trading volumes are lower and trading days are reduced. It was an up bar all the same. It wasn't a particularly strong up bar. Next chart is the US Treasury 10-year note futures. They also closed higher this week, really just trading in consolidation mode, effectively between the previous bar's low and the previous bar's close, in that little zone in there. And that's exactly what you would see where the market has 3 weeks ago come down to an important level, found some modest support, moved higher in response, but closed well off that week's high. And then this week, the market has traded between its low and the close in consolidation mode. You'll see that quite a bit in the markets. The market attempting to hold on to these lows here and not break down further. I'm not sure it's going to be successful or not, but there's certainly an attempt being made there for the market to hold on at that level. And if it is successful, it'll push higher in response. So we'll watch and just see how this works out. The next chart is copper price futures. Copper price futures accelerated higher with real vigour this week. It was a shortened trading week and selling pressure was modest at best, and that allowed this market to really push higher with an increased spread and up towards the highs of the range up here. You can see this market has been pretty strong more recently. You put a rough channel on like that. This market has shown strength recently, there's no doubt, working its way higher. And this week really did show some vigour. It was a shortened trading week and volume was pretty good for that period, almost average. So that's actually showing you that there was interest in this market. It wasn't just floating higher on a lack of selling pressure. There was some oomph behind the move. And you'll likely see next week in response a brief and shallow test for supply early in the week. And then if the coast is clear and supply isn't drawn out, probably an attempt to push up, and I expect it'll probably come up to this level. Whether it's going to challenge it or not, we'll have to wait and see. It was a pretty big move this week. I would expect to see a test for supply and then a push up to the highs of the range. There may be a slight exceeding of that level and then price come back and close at it at the end of the week. Something like that. So we'll see how that plays out. There's no doubt there was strength being shown this week and price accelerated higher in response. This is gold price futures. They also showed strength this week and really pushed higher with some vigour. Volume was lower on the shortened trading week, but not particularly low. You've seen this market moving higher consistently. When weakness has appeared recently, there's been very little downside in response. Generally, you'll see an equal and opposite reaction to a market where weakness has appeared and then the market absorbs that weakness, and you'll see something similar. There's a little bit, the market has comfortably absorbed any supply being drawn out and pushed higher in response, and it's actually pushed higher with some vigour this week with increased spread and pretty good volume on a shortened trading week. This market is showing strength, there's no doubt. Talking about showing strength, the silver market really accelerated higher this week. It's showing more and more strength as price goes higher. It's almost going vertical at this point, possibly a little too strong. But we saw weakness emerge here. There was almost no downside in response. There certainly wasn't an equal and opposite reaction. If that was the case, you would have seen price dipping lower down like this before recovering. But the market didn't do that. There was hardly any downside in response. Any weakness was absorbed easily and quickly, and then the market pushed higher in response. It's moved above the highs of both these bars, pushed up. There was a little absorption here. Some weakness did emerge on this bar, closing nearly down at mid-bar, but the market just absorbed that and immediately pushed higher in response. And it's accelerated higher this week with increased spread and above average volume on a shortened trading week. This market is comfortably absorbing any supply that's being drawn out, and it's accelerating higher. At some point, you expect there will be some consolidation, some proper consolidation, more like this. But at this point in time, the market's accelerating higher with real vigour and pretty good volume. It's not weak volume. It's not floating higher on a lack of selling pressure. It's accelerating higher. This market is showing underlying strength. There's no doubt about it. This is like crude price futures, and they have been drifting lower more recently. Not with any great vigour, but just drifting lower. Price is still trading within the range of this bar, but it's not showing any great amount of strength. It's just drifting lower. The market did attempt to move higher this week in response to this buying support which emerged last week, but it wasn't able to hold on to the highs of the range and ended up closing poorly down near the week's low. It was on low volume due to the shortened trading week, but even that being said, the market is not looking strong at the moment. It's not looking particularly weak, but the weakness is certainly the dominant feature here at the moment, with the market moving sideways to down at best. Into the currencies now. This is the Euro-US dollar currency pair. Price moved slightly higher this week on low volume, shortened trading week. Highs of the range up here. The market challenged this intermediate level previously, consolidated last week, and moved slightly higher in response this week. It didn't show any great amount of vigour. It was a shortened trading week and volume was low, but it didn't reach up to the highs of the range like you would have expected a normal market to do. So it is looking a little weaker than stronger, but it's moving up because the US dollar is moving lower. We'll move to the pound. The pound is looking slightly higher, not particularly so, but slightly stronger. the market moved up towards the highs of the range there, whereas the euro was lagging behind. Here's the highs of the range, of the previous range, and the market has ground its way through this level, and it did push up above the previous 2 bars highs, and it's just reached, or very close to it, the highs of the range up there where you would have expected the euro to reach, which it didn't. Volume was holiday affected, there's no doubt, and price really has floated high on a lack of selling pressure and the weakness in the US dollar. Japanese yen currency futures, they closed slightly higher this week as well, mostly due to the softness in the US dollar. It certainly wasn't a strong move higher. Volume was holiday affected. It's just floated slightly higher, closed mid-bar still, and within the range of the previous bar. It's a very weak move higher. We said this bar here was weak at the time, and prices moved lower in response. Well, this bar is weak for sure, and if it can't hold on, there's a chance it will break down next week and move below the lows of the range here. It's certainly not looking strong anyway. Aussie dollar currency futures, they moved higher this week. That's what the yen should have done if it was strong. It certainly wasn't strong. The price moved above the previous bar's high comfortably, and it's moved up to the next level higher. This is a breakdown line from well in the past, which has been extended across, and prices moved up to that level, closed just slightly above it. It's not an attempt to break out at this point. The prices really just moved up to that level, and you'll probably find there's a little period of consolidation in here now in response. But it was a good move anyway, and it's showing you that this market is relatively strong because it's closed above the previous 2 bars high, albeit just slightly, despite the weakness in the US dollar only being modest at best. So this was a good move, and this market's looking a little stronger now. Bitcoin futures. Bitcoin futures continue to trade in consolidation mode, attempting to hold on and consolidate within this range. We suggested at the time that's what would probably happen. That's why that shaded circle was placed in there. And the market's traded exactly as expected. It's attempting to consolidate and hold on and not break down further after the weakness we've seen more recently. This week, trading was inside the previous bar's range for most of the week, and price is just trading sideways. It's in consolidation mode. It's not attempting to push higher at the moment. What it's attempting to do is absorb any supply that's drawn out, avoid breaking down any further, and build up some strength. That's exactly what's happening at the moment. We did see some modest strength emerge last week, and this week volumes were reduced due to the shortened trading week, and prices just traded sideways in consolidation mode. This may go on for a little bit longer. The market did it back here in a similar fashion. And that's probably what's going to happen here as well. You'll see something of similar length, and then perhaps an attempt to push higher if the supply drops away and demand remains firm. But that remains to be seen at this point in time. I expect the market will continue trading sideways in response for a little longer yet. Back to the US dollar index futures just quickly. This market affects so many of the associated markets. Price has moved lower this week, but only slightly, and it's trying to hold on to the lows of the previous down bar. This is where the market's likely to move to if the weakness continues, but it's definitely showing a reluctance to move lower at this point in time. It's just drifting lower on a lack of demand. So we'll see how that plays out. I don't expect any serious challenge to the breakdown line here. If there was an up bar, it would probably only move up to that level and then more than likely continue lower, continuing to show a reluctance to move lower. Okay, thanks for your time. I'll attempt to do this again next Saturday. Thank you, and Happy New Year to you all. Thanks again. See ya.